Hey guys, what's going on?
Hello. A little bit of rain's going on, but no complaints. The rest of the country is suffering, so we'll take a little rain here in San Diego. And how's it going, Jamie?
Good, man. I guess I got out of there just in time. It was
Yeah,
beautiful
I
last
know.
week.
Did. Back to the rain. So as you know, as you can tell, this is not Andy's voice. I'm not coming at you from Texas. Andy took over for me on Tuesday, and I'm taking over for him today. We've got a deep bench, and that's just kind of how it works around here. So I'll be your presenter today with Jamie helping out. And so, as usual, the old disclaimer slide reminding you that we're a content publisher. Software as a subscription company. We are not registered investment advisors, so we are not giving out financial advice. And anything you see or hear should not be construed as investment advice. If you need that, you've got to talk to the guys who took the tests and can charge you money to take that information. Um, Going forward, every day that we have these webinars, we like to remind people our product's been around for 15 years and it's been a lot of versions. So there's a very robust, powerful program out there that's very difficult to learn in just a day or two. So we recognize that and we do our best to try and give as much concierge service and onboarding as we possibly can. And some of the ways we do that are these afternoon webinars. But the first one here, the Traders Room, is Barry's live trading room. There's over 500 people in there daily, a handful of really good traders contributing, and Barry moderating like a saint. He does a great job in there. He was born to do that job, I think. But he shares his desktop, shares his ideas, and talks about trade ideas and shows some of trade ideas and gives you guys help. So that's bell to bell, Monday through Friday, and it's a free room. It's giving a lot of paid chat rooms a pretty good run for their money out there. So join part of the Trade Ideas ecosystem and take advantage of a free trading room with Barry Monday through Friday. And then, like I said, today, the afternoon 5 o'clock Eastern webinars, we do those Monday through Thursday. Friday, we don't do afternoon webinars, but we have what we call a support session. Tomorrow, we'll be live from 11 to 2 Eastern for 3 hours, and whoever wants to come in and show up can dictate what we talk about, what the content is, and what you'd like to learn and have demonstrated for you. So if you're thinking about doing that, I highly recommend it because we only do it once a week. And then lastly, the Trade Ideas University is Monday through Thursday during the day, 12 Eastern, for about an hour and a half. Right now we're doing beginners through advanced, Monday through Thursday, then it resets every Monday. So anybody, of course, is welcome to come by as well. It's about 6 hours of content. We also have this entire course recorded. So if you're somebody who might be interested in viewing that 6 hours worth of content over the weekend, you can always email info@trade-ideas.com and request that link. We'll be happy to send that out. So all those things together really provide a nice onboarding system to help get people familiar with the product. We try to make ourselves as available as possible, and that's not even considering the live chat that we have on our website as well. All right, so let's get moving here. On a quick reminder, Brokerage Plus for interactive broker clients. If you have interactive brokerage, and if you also have a Trade Ideas premium account, you can play around with the concept of auto trading. You can get more information here at the bottom as you see trade-ideas/beta. That will give you more information for the Brokerage Plus product, which is going to become pretty much kind of the main new focus going forward here for 2019 at Trade Ideas. So the agenda for today, I'll do a market recap. Got a few comments to make about the last few days and intraday as well. Jamie, as usual, has got some ideas and some concepts to relay about what happened today in the AI module. Not a bad day as it seems. And since I normally do the trade of the week on Tuesdays, I had some thoughts about 3 or 4 of the past trade of the weeks. Some are performing and some are not. And I wanted to talk about maybe how to handle a situation, when you're swing trading, the worst thing anybody wants to deal with is a stock that gaps down. We've got really 2 interesting examples I'm going to go over in 2 different scenarios that might help. And then I want to go back and look at just a simple strategy, the extreme volume high-low. It's a multi-strategy scanner, and I don't day trade the momentum stuff, but I'm working with people that do, and we're working with using that, it's kind of a sweet spot hour between 11 and 12 Eastern for some possible setups. So I was going to go back in history and kind of maybe show you guys visually what I'm talking about. And then towards the end, if you guys have some questions, hang on to them. And what I said today is, what about general trading related questions? You guys have questions on psychology, on time of day, on methods, on technical analysis, whatever you guys want to talk about. We'll open up the questions panel to some of your questions towards the end of this session, and including in that would be the chart requests as well. If you want to have us take a look at a chart, we can always end. We always like to end with a few of those and get an idea. But let's get right into market, because it's rather constructive. I mean, it's staying rather constructive. Take a look at a few points here. Grab my handy dandy drawing tool. I remember down here was when we were down 20%. Everybody was talking about bear market headlines for about a day and a half. Well, we have since definitely come out of there, and a lot of the focus for me has been on the moving averages and these pivot lines. Well, what's most interesting to me the last couple of days here, I was going to talk more about it on Tuesday and say this is kind of what I was predicting, but it's too late now. That's hindsight. Again, when we see this price action, and I like this rising 10-period moving average, that's kind of going to dictate to me what the direction of a stock chart, or in this case an ETF chart, wants to do. And one of the nicest, cleanest setups is when we have a push higher and then a beautiful sideways action for a few days. And again, look at this. If I zoom in, there was never a closing price below the 10-period moving average. So this literally becomes like a rail, and it just rides that rail back up. So had I been here on Tuesday, I would have said this is looking really constructive. These patterns usually resolve themselves kind of like a bird in the hand. You're just holding a bird, and the bird just kind of waiting for its moment to fly away. And that's what happened. However, the big hurdle I think I see here is this 200-day moving average. It's just a complete flat line. Look at that. Bravo to the market. It's done a great job moving through moving averages. Sideways consolidation under this pivot line. Moved through, claimed it and held that price. Moved up, sideways action, blew off some steam, and then we're still moving higher. But in the past, a little bit sloppiness here, I agree, but this 200-day moving average has definitely back here shown a little bit of relevance. It got a little bit choppy back here, kind of overshot it here and overshot it again here. It's not really an exact science, but I fully expect a brick wall of resistance and selling to come up here. And I'm going to actually even kind of go a step further. In my personal retirement account, back when we broke the 200, I went to a bit more weighting to bonds, less stocks and more bonds. And then as we broke down here, right about here, I think I even tweeted it, I went to super heavy bond allocation, thinking stocks are not in favor. Well, I'm going to tell you guys a little secret. What I'm going to do is I'm going to move my allocation back to a bit more a better weighting in the stock asset class, because right now it's super heavy bonds. And so what I'm going to look for is quite simply, if the price action in the SPY can post a few closes above the 200-day moving average and show that it's stable up there, I'm going to be logging in and really cutting those bond exposures and get back into stocks. So something like that, a long-term retirement account, you really don't want to be tick trading and making decisions on a weekly basis. So I'm trying to keep it as simple as possible and just use the old technical wall line in the sand here, which is the 200-day. So what I'm getting at, guys, is I fully feel like it's a fait accompli. It's going to be we're going to have a date with the 200 moving average. The price action's in the neighborhood. It's so close. Usually that's what we want to do. The price action's going to want to test this major level, and I'm real curious to see what happens. So again, this is kind of the last defense after this big sell-off that we had. It's been kind of declining volume, but that's okay. The price is what matters. But if we can just post a few closes above this 200-day moving average, I think we're back in the buy the dip mode again. We'll see. But this has been an interesting lesson in volatility for sure. Let's take a quick look around here. That was the S&P, of course. So the big takeaway is riding these moving averages still, but headwinds are coming right here at the 200. NASDAQ, same story. Flat 200 right above overhead. A little bit more sloppy in the 10-period moving average. May have been with some NASDAQ stocks being a bit more volatile. But nonetheless, back above. And I think, once again, the NASDAQ has a date with, the QQQs have a date with the 200-day moving average. And again, we're just going to wait and see. can the market close above that 200-day and grind higher? If it wicks through, this is what we don't want to see, guys. We don't want to see a day or two where we go through and then come back and then put in a bottom tail like that. That's an ugly drawing, but that's not really what we want to see. We want to see confirmation that we can get above that level and hold, and then we might be in a whole different environment again for 2019. We'll see. Quickly looking at IWM, beautiful looking chart. Again, not any reason to get out of this if you were riding the IWM as a vehicle. Looking at that 10-period moving average, just cupping the bird in its hand and letting the bird get ready to fly. Then lastly, what we like to look at is the Dow. Dow is getting ahead of itself, isn't it? Respective to the other charts, the flat 200 is the same, but the price has been chewing on that flat 200 moving average for the last couple of days. So that's kind of interesting in itself. Let's see. Oh, I wanted to look at the intraday stuff a little bit. If you give me, all right. So maybe even go back a little farther. Well, let me take a look at the Qs real quick too. Yeah, it's definitely a bit more evident on the Qs. What I wanted to kind of highlight again was the big move that we had yesterday was again held in place by the intraday, the 10-period moving average. And I don't know if John's in the room, but John's somebody that I work with, and we talked extensively about this setup right here. I don't care whether it's an ETF, the Qs, or XYZ, or any other stock in play. When you see something gap up like this and just go sideways, in my mind, it's always, not always, it's a pretty good setup to lean on, meaning once this moving average starts to catch up to it, in my book, over 15, 20,000 hours of staring at charts, this seems to be the catalyst right here that pushes the price higher. Now, does it do it all the time? No. And if it doesn't, then we have an easy out. You know, anything that closes below this 10-period moving average, we would probably get out for an intraday trade. But I'm going to come back to this later a little bit in the session after Jamie and go through the high-low pro and look at that sweet spot between like 11 a.m. and 12 p.m. Eastern and see if we can start to find some of these types of setups. And again, in my mind, this is a great setup that I liked when I was day trading momentum, but it still gives me information. Like watching the markets yesterday, it was just like, I feel like we're going higher. It's just every time you see, not every time, I can't speak in conviction like that, but more often than not, this is an interesting place to lean on and anticipate rather than waiting for this breakout bar. You can anticipate and get some decent prices. So we'll come back to that. I just thought it was notable that yesterday, again, another example in the bigger picture, when price action is in motion and in momentum, this 10-period moving average is the guiding hand that keeps all things moving until it doesn't. Look at this. Here's our first close, a day and a half after the big move. You've heard me talk about a day and a half as well. Stocks and movements get a nice day, a follow-through day the following day, and at about midday, you start to get a little nervous. The short-term traders want to take profits. So there's a close below that 10-period moving average. That means the trade is off, really. And if you look at it, it's just been grinding a mess ever since that close below. So the sweet spot really, you know, is a day and a half trying to ride these 10-period moving averages. And this is as simple as I can keep it on an intraday chart. Notice I do not have any other indicator on my intraday chart. That's all I've really ever needed. So with that said, we'll come back to some other stuff. We'll be looking at charts. And again, I'm going to turn over to Jamie to talk about the AI. But if you have any questions, trading related, psychology related, method, you know, we'll go ahead and kind of make the second half of this seminar today a trader's workshop and see if we can address some questions. And additionally, like I said, maybe a couple of stock charts if you want us to take a look. It always helps to know if you're long or short or thinking about getting in. We can put a couple extra pair of eyes on it for you. So with that, I'll bring Jamie in and see what he's got to talk about.
Sounds good, Steve. Let me grab the desktop here.
Are we missing any questions there? Or are we all caught up?
Looks like we're all good. I believe we are all caught up. Let me just get the right screen on here, and we should be good. Just let me know when you can see, Steve. Am I coming through okay on the audio, Steve? Hello? Steve? Can you hear me?
Sorry, I was on mute. Yes.
Okay. All right. I was like, oh no, what's wrong with my microphone? Okay. All right, ladies and gentlemen, welcome to my desktop. I've got the Holly modules up here, and it's pretty interesting this morning from all the modules. Everybody got off to a pretty bang up start. Down here, I'm looking at the strategy panel here, and I've got Holly Grail. We can see here off to the races. Boy, this one peeled off pretty quick, about midday. Even in risk off mode, a nice little pullback from highs. Really, it was 2.0 that carried all the water today, and as we can see from the channel bar up here, spitting out 12 trades and ending up a little over 4.5 points total, gross-wise, for gains for the day. So always a good idea to go over the ones that Holly got out of early and see the big risk-on spreads here. For example, I've got the 2.0 blotter here. Let's just go ahead and flip the module over to 2.0 as well. And we can see risk off, not so bad. Risk on, a little bit better. But what was interesting today is you just really never saw the red. Even in the pile-in period, there was not even really a drawdown. It was just boom, boom, boom off to the races, taking a few pullbacks. At some point in time, hopefully, we're going to be able to expand these equity curves because, we've got Holly automation coming down the pipeline pretty soon. And, different people are going to play it different ways. Myself and Michael Noss, we've been just jumping in there every day, taking every trade and seeing what happens, trying to formulate some good working, not strategies, so to speak, but methodologies, right? So we're finding some pretty interesting correlations and whatnot. Don't have time to get into that in detail today, but hopefully it's something that we can share with all the users that plan on engaging in this type of trading moving forward. But the two risk-ons that I want to point out today are just classic. The first one is a DEO right here. Why did Holly get out? Well, as soon as we get the entry here, we get a nice little pop. But, how many times have we seen this, ladies and gentlemen? This isn't, this should be something that's very familiar to all you regular attendees. Feel like Groundhog Day here. We can see the shaded area up here. Why did Holly get out? Because we had this little consolidation period. And once again, to rehash the reasons why Holly will get out of a trade, we got the basic things: stop loss, profit target, timed hold, right? But there are also two audibles, I like to call them, that she can call to get out of a trade prematurely. Those come in the form and manifest themselves in the form of profit save and reduced risk, right? If the stock isn't going the way that she wants it and flatlining like this over this little 45-minute period, she has the right to pull the plug and get out early. Profit save, Holly takes a whopping 12 cents in risk off mode. But we've seen this before. We've seen this movie before. A little consolidation after getting up a little bit, not necessarily a bad thing on several fronts. Now, what sticks out to me immediately is we got the nice pop and a little sideways action. Holly can't read charts like we do, right? So once again, man working with machine, the best way to interact with this type of technology / statistical trading set. What do we have right here? We get that little sideways action, and then we get a nice little clean range break. Now, this is a high price stock here, so while these don't look like very big gyrations, there's some nice point action in here. So we're in here right here. Number one, we see Holly getting out. We're like, this looks tight. By the way, look at where DEO is on the daily as well. So this guy was out of the box today, all-time highs. That's a good sign. What Dave Mabe might call a very tradable gap, and clearly it was today. So number one, we can just ignore Holly's signal and go, you know what, this looks choice. I'm sitting in it. I think there's more meat left on the bone. Or we can decide to bolster the position as we're seeing this area here get cracked. Would have been a great time to tack on a few more shares and ride it on up to this area here. Of course, just like everything else today, we did have the ebb and flow, the little pullback, but this thing still finished strong. Doesn't matter if you got out here or held it to the close. That's a big spread right there, ladies and gentlemen. What do we got there? 6 cents, 94 cents in the spread between risk off and risk on. And, just right out of the textbook here. Nice flat consolidation and a move higher later in the day. What do we have going on DEO today? How is the health on the relative volume? Well, we can see here it cracked over 2.5 today, finished at 2.54. These lower time frame metrics were pumping most of the day. So these are little things that we can sprinkle on top of the fact that, hey, what's bringing me this play? Holly, a highly advanced statistical system where everything's got statistical weight behind it, and got dough wants to go. 66.3%. Anything coming out of that guy today? A little guy finished by overperforming today to the tune of 71.4%, when we were only expected at 66.3 on a total of 7 trades. Tailwind got the other mention here in risk off. And what do we see here? We see pretty much not the identical thing from DEO, but something very similar. We get the signal here. What do we get? We get a little sideways action, a little up move. Holly pulls the plug, and not the timeliest exit. Looks like she exited at this bottoming wick here. Once again, what did we have? We had sideways action. Now this one wasn't out of the box like the DEO, but when we're on the intraday time frame, well, once again, nice solid movement sideways, right? Not necessarily a bad thing. What my eyes would immediately go to is, hey, if it cuts, that's a nice clean range break. So we can just basically ignore Holly's exit signal one more time here. We get nice sideways action as it slowly creeps up here, knocks on the door, takes a little pullback, and then finally goes. So whether you held or whether you bolstered the position here, you would have came out pretty good doing that. See a question pop in here. Let me see if it's related to what we're talking about.
Forward market on. I'm sorry, risk on, risk off. Probably deserves a good response.
Yeah, let's see here. Oh, yeah. So risk on. Risk on is Holly obeying her rule set, right? Now, what is the rule set? Well, using her.
Risk off. Sorry.
Yeah.
Don't want to confuse.
Yeah, true. The funny thing is they're both RO, right? So I stumble over my tongue sometimes. Risk off, as Steve just said here. That's Holly playing by the rules. The rules are adhering to her stop losses, profit targets, and timed holds. Then she has the other 2 things that she can get out prematurely on. So there are 5 components, or 5 different conditions, I should say, on why Holly will exit a trade, and that is risk off mode. So if we sort by risk off, we can see how Holly did obeying her rule set. Now risk on is simply there to show you what happens if you stay in the position, right? These things are going to continue to update as we move forward. So once again, Holly obeying her rule set because she's programmed to do so gets out right here in this little shaded area. Now, when we see Holly getting out, we can, if we like what's going on with the chart, ignore her signal and go, you know what, Holly? I see you getting out, obeying your rule set. Thing is, I'm a human. I can read these charts a little bit differently, and I'm going to ignore your risk off exit, and I'm going to take additional risk by staying in the trade, right? So that is the main difference between risk off and risk on. Risk off marks the trade where Holly got out. Risk on continues to monitor the progress throughout the day. So in other words, risk on, not adhering to the stop loss, the profit target, the timed hold, assuming you like what's going on the chart. So Louise, let me know if that helped illuminate the situation, or if I need to go into a little bit more detail. Steve, anything to add there?
It's just a little saying, you add an extra word to it. Keeping the risk on reminds you're going into the close. Taking the risk off means you're adhering to the exits that Holly is demonstrating.
Right. And not every trade is risk on worthy. All right. Let's take a look at one more here. ADC looks very similar to what we saw. Okay, DEO, what do we get? she gets antsy, going sideways. Same thing with ATRA. And then look here, reduce risk. All right, we get the entry signal here and just ebb and flow through the entry signal for how many minutes? 1, 2, 3, for another good 45 minutes, just seesawing around that entry line. Sometimes they go, get a little lift initially. Sometimes they don't. Sometimes they sit here and do this little consolidation dance. But the bottom line is this. If you see this going on and you like what's, maybe you consult the daily. Maybe we squish this guy up. What was going on with ADC today too also looks like it was out of the box, very similar to the DEO. Now, this is always a very good characteristic to have on your side if you're long something, because theoretically there's no resistance. There's nothing apparent for it to bump its head into. There's no guarantee that it's just going to keep going up, but I mean, that's a pretty nice consecutive day run right there. Sometimes they go longer, right? You just never know, but that's a nice quality to have about it. So this one, exact same thing that was going on with the other one. Whether you just said, you know what, I like the sideways action, it's not necessarily bad. We didn't even really get halfway down to the stop loss. And remember, that's why we have stop losses in case we're wrong. And pretty much the same thing plays out here. You hold what you got, go risk on with Holly, or you ignore Holly's risk off and you go risk on. And then maybe you bolster the position right here as this range break was occurring. And this one did the exact same thing. Once I got through these levels, a little sideways action. Clearly there were buyers in the stock and they gave it a nice push towards the close. Now this one didn't really have mega volume pumping through it today. Finished actually a little bit below normal on the relative volume. But as we all know, volume can be the great equalizer, but there are plenty of stocks that make big moves without massive volume, just like there are stocks that make big moves with massive volume. That's about all I got today from Holly. Those are the highlights on risk off and risk on. 3 decent examples here. The only exception with this one is she closed it out for a small loser, and then we had 50-something cents on the table as far as trying to capture some of that spread there. Yes, Waleed, the range breaks, the no support, no resistance. And matter of fact, this little guy is starting to come back to life. It was pretty dead for a while, but the turbo up family, no resistance, quite a few things coming through there. And it's always nice to see a Holly trade that's, and sure enough, what did I see later on? DEO coming through the all-time highs or the no resistance multi-strat window there. Yep, good stuff, nice and simple. That's why I like them so much. All right, Steve, I'm ready.
All right, bring it over.
Kick it back. Here you go.
All right, can you see my screen?
I can, and we just saw a question pop in there from Alan. He's asking, can we direct Holly to look at stocks $50 or less? That's a great question, Alan. But all of the strategies that you see in the Holly panels, they're predefined. They're already geared up and ready to go. Now, some of them are going to be in that price range, and some of them are going to be higher and lower. But it's the event. In other words, it's the strategy. It's the event that we're looking for, not necessarily the price of the stock.
Right, and there are a couple of thumbnail strategies like Little Big Guy and what's the other one? Mighty Mouse that are strategies. Those are going to be under $10 generally. So, I mean, you can keep an eye out for those. You can always turn off strategies or turn on strategies, but there's really only a couple that are relevant to stocks at lower price ranges, and those are them. And by the way, on our website, at the bottom of the footer of every web page, if you look under the frequently asked questions, there's something called AI strategies thumbnail. If you're not aware of that, you can go in there and grab a quick shot of what each strategy is looking for and get an idea for maybe the ones that are looking for smaller stuff. All right, let me get rid of my beach wave picture here. There we go.
Very pretty, Steve, by the way.
Yeah, that's what I used to do in grade school. Carve that into my desk. All right, so we're going to go over some trade of the week stuff. I wasn't here Tuesday, and Andy didn't really talk a whole lot about that, but there's a few of them that are still in play, and they're all kind of acting differently. I mean, to start with, the one that came through the most recently was Occidental Petroleum. You can see that green line. It looks like many of the other charts we've been working on. Again, there's the kind of the bird in the hand idea, hoping that this thing wants to fly away. But it did trigger. Looks like it triggered yesterday. But this one is really going to be watching closely the price of oil. So if you're participating in OXY, it's not really doing too much, just going back and forth. But the price of oil, if that takes off, that should really help Occidental Petroleum. But that's very close to where the entry point was. No harm, no foul. And like most of these trade of the weeks, we're looking at this red 20-day moving average. And typically the stops that were called out on these trades, going back even a few weeks, were if the price closes, that's the operative word, closes below that red line, then that's a sign to get out. Now, granted, I understand in the heat of the moment when we're going to look at something, when it's trading below that red line, there's no way you're going to know is it going to close or not at the end of the day above there. So it's tough, it's going to be up to you as to how much pain you can withstand if it does trade below, but because many times it might dip their price action below and then pop it right back. At the end of the day, you're looking at a wick kind of like this one, bottoming tail, and you're wondering, why did I get out in a panic mode? So the first thing I want to do is go back to NVIDIA. This was a one that was really unfortunate, but the Swing Trading Almanac says you're going to have this happen to you every now and then. And I want to kind of maybe go over some scenarios. Now, sure, NVIDIA was probably up 8%, going into nothing. We had no idea that the damn CEO was going to lie under his teeth all this time and then all of a sudden drop a bomb and say, yeah, we're not going to do that well. It doesn't really ever sit well with Wall Street. They don't like that, but it's called an earnings warning. And that's what NVIDIA dropped. So when that happens, obviously we're way below the red 20-period moving average here. But what I want to focus on is when the stock has bad earnings, generally, we'll get to X in a minute, when the stock has bad earnings or bad news or profit warning like NVIDIA had, typically the rule that Andy and I used to use when we were quote unquote managing money, I'm using a technology called Ditto Trade where people just attached their accounts to ours. It's no longer around. It was a cool concept, but it didn't stick. One of our hard and steady rules was when we had an event like this was to wait 3 days if we could. Well, let me backtrack. If you're thinking about getting in a stock, then you don't have a position and you see it drop down, wait 3 days, because it usually seems like 3 days is what it takes to wring out all the weak hands of the new catalyst, the new bad news. And so here's a perfect example of 3 days. That's why I wanted to show NVIDIA. So there is the gap down. And I understand when you see the news pre-market and you're underwater and you see this open, your first inclination is to want to pound out right here in this red bar and just get me out. I don't want to deal with it. But typically we get a little bit of weakness and then there's some sort of a reaction. And what that does is that sets a low. That low right there, I'm going to draw that in, becomes really the target low. If the price rolls back over and takes that target low back out, then we've got problems. Well, you can see the very next day it came and attempted take it out, but didn't get it. It was close, and then rallied from that point. So I know it's hard, and nobody wants to has to deal with an overnight surprise where you had a stock that was green and all of a sudden it's costing you money. You just need to figure that sometimes if you can withstand a couple days of wringing out the bad weak hands, you might get some sort of a reprieve. Now, from here, I don't know. I mean, this looks like a pretty tough level. NVIDIA, this might be the most that NVIDIA can squeeze back out after this bad earnings, after the bad earnings warning, because we're running right into a declining 50, the 20. There's a lot of headwinds coming up here. So, if I were in this trade, which I'm not, and I was looking to try and minimize the pain, and I was able to hold on through all this, I probably would be selling half right about here, just to try and lighten up and minimize the damage. I don't know how much more upside this NVIDIA is going to have, but what I really wanted to focus on was whether you're in the trade or not. If you're thinking about getting in the trade, it's very unusual to jump in the first day after bad news and then have it work for you. But I have an exception to the rule coming up here. So I just wanted to share with you, 3 days always seems to me, and Andy, kind of the period in which the weak hands get squeezed out. And if there is going to be a relief bounce, it might occur around this point. But now, there's really not much left to go here. It's kind of back to the entry point of the original trade, and you're in damage mode on something like that. Do we like it? No, but it's something that we're going to have to deal with when swing trading. You can avoid biotech stocks. This kind of stuff can happen all the time in biotechs, but you never really know when it's going to happen to your stock. Now I want to go forward to one that's been working for a while, which is ex-US Steel. And ex-US Steel, the buy point on that one on the trade of the week was as close to 20 as possible back here on, I believe it was, yes, this day. So we've been going sideways for the most part, kind of grinding higher, and then it ran into earnings. Well, we all knew it was going to have earnings, but wouldn't you know it, X just completely negated a lot of the stuff that I just said. So this is kind of the exception, guys. You typically don't see stocks that get hit on earnings bought back immediately. But when you do, it's quite a feat, and that's quite a tell as to what might be coming. The market quickly realized that this was mispriced at the gap down today. So I don't want to get into fundamental reasons. There's some ideas out there. There's some infrastructure plans, other stuff talked about, but the price action is all we care about. And boy, when you see a stock gap down like that and not get anybody a chance to even wait around for those 3 days before it bounces, interesting. There could be some more meat on this bone. We are back above yesterday's close after bad earnings. That's incredibly strong. So if you're still in X, bravo for not panicking out on the open. Same thing, what I showed you in the video. Look at this. The first 15-minute candle was, get me out red. But it always seems to find some sort of a price where it digs in, hopefully at the top of the hour, 10 o'clock hour, and then we can see where it goes from there. And the last thing I want to say about X, once again, using the intraday 10-period moving average, we can gauge the price action. So it ran right into it. The price action got caught up in the 10-period, sideways, it fought it, and then there's our first close above that declining 10-period moving average, which means that it no longer had a hold of it, and from there the price was free to bounce. And then as we get into kind of the later part of the day, which I'll talk about in a minute, these the 10-period moving average line is not quite as reliable as it is in the first half of the day, in my opinion. You always seem to get a little bit of slop towards the end of the day, but that I think was notable as well. All right, so we've gone over Oxy, we've gone over X. GDX was also one that's been hanging in there. It never really came back below its entry price. It's been holding up, I believe. When this one was originally called out, we did have the 50-day moving average so close that this was the stop out level. So you can see good 4 days of solid support at the 50. And now the gold miners are absolutely outperforming everything. So one of the reasons, again, I wanted to go over these were to talk about what happens when the stock gaps down. Sure, there's nothing wrong with panicking out, but I can tell you from experience, more often than not, when I panicked out off the gap down and got out after the bell rang, I kind of regretted it. Probably should have stuck around and see what ranges were established to help me make decisions going forward. Scott, the recordings of these webinars will be on our YouTube channel. We probably uploaded tonight or tomorrow, but we have a YouTube channel. Okay, where do we find what the strategy's names meant? Ken, it's on our main website, trade-ideas.com.
I dropped the link in the chat area for that.
There you go. All right. So that's some comments on the trade of the week. Again, what to do when your stock gaps down. If you can, try and hold on and see what ranges are established. And once that first day range is established, that's your bogey. That's your target point. If it breaks it, you're out. If not, you're going to get some relief, but it's up to you as to how much relief you want to take before it starts to run into some resistance again. So that's that. The good, the bad, and how to handle the bad. Extreme Volume High-Low Pro. Again, Waleed chimed in. He knows what I'm talking about here. He has a scan that he got from Andy last week, but I'm going to use the one called Extreme Volume High-Low Pro. I find this one very interesting. I've kind of got it queued up. This is 11 o'clock Eastern. It's kind of the sweet spot. The 11 to 12 sweet spot is there for a reason, because a lot of these stocks that are coming through here, they're coming through on highs, and they're very much extended and separated beyond their 10-period moving average. And my idea is, as a day trader, a momentum player, which I no longer do, but if I was forced to do it, I would be looking for this kind of play, looking for entries as close as possible to that 10-period moving average for a secondary push into lunchtime before the day gets too old. So let's go back this morning and see what some of these stocks look like. Race, okay, there's the arrow. The signal hasn't made a new high, but a little bit of space in between the signal and the 10-period. sideways action, and what do you know, for the rest of the morning, it kind of grinded higher, better than going lower. WIT, nothing really to write home about here. Let's see. Okay, here's the one. Okay, so this one first came out at 8:28, 11:28. It would have been right here. Probably would have been hard to buy this green candle. But what I'm looking for is to keep an eye on these things. These things come through, and you keep watching them throughout that hour. And if you see them start to go sideways, look at what the inflection point was that moved the price higher. The old touching or very close to touching the 10 period. And again, what I'm saying is we're not waiting for the price to hit it and then bounce and then bounce and then make a new high. I'm saying you should be able to lean on this point right here before there's ever confirmation that the price action is going to move out of that sideways action. That's what I think is the best part of this strategy, is everybody wants to know, hey, Steve, what's the scan that shows me right before a stock's about ready to do something? Well, this is about as close as I can get you guys to that scenario. Let's take a look at what else is on here. Again, we're just looking for stuff that was coming through in the morning to try and keep an eye on. Nothing really happened there. What's this, Jace? Oh, that was Toll Brothers. Well, again, one could make a great case for, taking that entry and leaning on it, but there really wasn't much movement beyond there. But it wasn't a bad one, that's for sure. Oops. Take a look at a few more here. Yeah, we already looked at that one. Click. What's going on with Click? Well, once again, all this airspace between the price action and the moving average. I mean, you can jump in here if you want, but more often than not, when that happens, you're always going to be probably the last one to the party before the stock price takes a breather and pulls back to that line. So this one, a little late in the day, but still, nonetheless, it held, but didn't really give a whole lot of alpha to the upside. POIX, we've seen that one. Let's look for one we haven't really seen yet. Okay, now here is, let's look at the example of what happens when it doesn't work. All right, so here would have been the entry. Here's a stock we've been watching all day, and then it comes back, and here's the moving average meeting it. Here's a half an hour of a little bit of good movement, but all of a sudden, when the price closes below, all bets are off. This is when you want to get out of something like that. Moving forward here, let's see what else we got that we haven't looked at yet. This looks like a new one. All right, a little sloppy, but still it worked, and it worked twice. So here's our morning move. Here's your signal candle. You probably don't want to buy up there at new highs because you got all this space. But look at the rough area right there. If you'd have taken a chance on leaning on that moving average, you maybe had 5 cents of downside, but boom, it moved up higher, and then it held again there, and then it moved up even to new highs. So that one would have worked. Let's take a look at a couple more before we move on. Okay, beautiful. Sideways action. I mean, this one was probably the first time it came through was probably right about, I'm going to mark that up, right about there. And it pretty much was very much close to its moving average. Another great example right there. Let's see. Let's go ahead and end with this one, guys, because this is about as good as it gets. Nice looking daily chart, trying to break out of some congestion. We get a signal candle, right, pretty much here, right on the line. So the actual alert was very much close to the line itself. Let's see if we can get just one more, just for fun. mRNA, what's going on there? Didn't give us a chance. It moved higher before then, but then we're starting to get a little bit late in the day here. Oh, look, we're at 12:49 East Coast time. So this is where this pattern starts to break down in my book. We're getting a little bit too late in the day. I'd rather see stuff earlier in the day. So I think you get the picture. Going back to yesterday, the QQQ, you really can't give a better example of what I'm looking for. And on those types of trades, if you see something that gaps up, oops, let me just, you see something that gaps up like the Qs did yesterday, just sideways. It's, I hate to use the word textbook, but in my mind, it really is kind of a textbook point in which you can lean on and anticipate. This is an anticipation trade. This is not a confirmation trade. So that's that. All right, guys. See some comments coming through. I think Andy, I'm sorry, Jamie entered a few of them.
Yeah, we're all caught up.
Do you have a sense of when auto trading will be released? Again, like Jamie just said, hopefully mid-February. So we've got a few minutes, maybe less than 10, not a whole lot of time, but this is the part where we can come in. And if you got a trading related question, or like I said, if you've got a chart request, go ahead and let's do it now. Let's take a look. Micron chart. Not bad. Let's do this. It's a semiconductor, so let's look at the sector. Very much similar. I even like the SMH is better than I like Micron, which is a good thing because the semiconductors are under the SMH. So if the sector itself can get going, then Micron was going to have a good chance too. But like a lot of charts I'm afraid we're going to look at here, they all seem to have the same ominous upside. The 200-day moving average, it's coming into play for sure. But back to Micron, what I like about it is it's moved up and it's got some sideways action. Maybe a day or two early before this moving average, before this 10 period moving average comes up to catch the price action. What we're talking about here is fractal. Fractal meaning it works on all time frames. Well, for me, I like the 15-minute and I like the daily. And I just happen to notice that a lot of times charts that have a nice consolidation pattern that are moving higher, the 10 period works just as well on the daily as it does on the intraday. So with Micron, I might expect this another day or two before that moving average comes up and forces the issue. All right. Oh, I missed PayPal. Actually looked at that one earlier. So did they have earnings? Yes, they did. How did you know they had earnings, Steve? -25 means they had earnings this morning. So they had earnings, even though the chart pretty much tells the story. When you see a gap like that, that's what's going on. So kind of like what we talked about earlier. Here's our downside earnings. Look at the thrust on the open on the downside, and then the algos quickly bought it back, and that was the worst pain that you had to deal with. Matter of fact, I'm guessing you probably didn't even have that much pain. Let's look at a 3-minute chart here. So yeah, for the first 9 minutes, it was rather excruciating, but the price has since mellowed out. So now we have our downside. I mean, our downside here is today's low. I think you mentioned your long at 88. So you picked up the misfortune of the others who were holding this. You picked it up for your opportunity. So I think you really don't want to see it. I mean, obviously you don't want to see it trade below 87.59, but tomorrow on the open there could be an attempt to breach that. I think, again, going back to what is the low of the candle set on the first day, which is today, and so that would be right there. So literally you may have to give this thing a 1.5 to 86.50 possible. All right, so let's see, Micron, got that one. Somebody sent me a cloud link, Christopher.
Yeah, you know what? I loaded his cloud link up. I'm just back testing it, so I'll tell you what I think here in a minute.
Macy's has not had earnings, but had a great day. Oops. Sorry, RTH retail. Nice looking sector chart. See how I went to the sector chart there? Breaking out of a nice move. So Macy's, it's going to have to clear that level. That is where the gap down occurred, and the original gap is so this is really where it's going to start. The person who said Macy's is there a position in there? Just can you look at Macy's, says Gerald. Okay. So, you know, you've also got that 20 period. You got some headwinds here, but I do like the way retail is holding up. So you've got that going for you, Gerald. Oh, Amazon with earnings. He's asking me. Let's take a look at how Amazon's doing aftermarket. Oops, starting to grow lower, creep lower. Again, I'm a student of price action, not what they say. The only real profit center in Amazon seems to be their Amazon Web Services, and even that seemed to slip a little bit. So I think that might be maybe what the price action is focusing on. And would you look at that here? Let's take a look. It ran right smack into its 200-day moving average. So this is kind of giving a possible precursor as what some of these other stocks might be doing when they in fact do get to their 200-day moving average. All right, so again, 200-day moving average, we've been anticipating it as it being a wall for the big ETFs, the market, and some of these stocks that we're looking at. I think that the Micron we looked at and the SMHs, Amazon is clearly demonstrating that right now, that green tag, it's trading lower down here at these levels. So kind of in no man's land. I don't have a better answer for you, for whoever asked that question. All right, then we'll do one more here, and it's going to be the top of the hour. So we'll end with David on CONN. Did we have earnings? I don't have any earnings data in there, so I'm not sure what that gap up is for, but it appears that the declining 50-day moving average certainly has a hold of that price. So I would say this is very possible. It could come back and fill the gap. What you want to see, though, is a close above that declining 50-day moving average before I think you even start to get excited about this particular stock. You know, for all the ones we looked at out there, the semiconductors seem to have the best look, I think. Semis, SMHs, that's a decent looking chart. But again, we're going to run right smack into that 200-day for a lot of different items, stocks, indexes, sectors, what have you. All right, so I'm all talked out. I think we got through all the questions. Appreciate the participation there. Go ahead and bring Scott back in, and I'll bring up the rest of the slides here. Scott's on mute.
There he is. Yeah, I found my mute button. Thanks. Yeah, there's a test drive coming up next week, which is a great opportunity for everyone who's not already a premium subscriber to try it out. And if you're a premium subscriber, but you signed up after November 15th last year and you don't yet have access to Brokerage Plus, you can try that out too. It's just under $9 for the week. You get 5 full days. Sign up at trade-ideas.com/test drive, and you get all the premium features and everything for 5 days. Also, special webinar, special education stuff. It's a good deal. It's always popular. We do this once a quarter, so try it out. And we've also got an ebook available. Both Steve and Jamie contributed chapters. Go to trade-ideas.com/ebook, put in your email address, and get the download link delivered to your email. It's got 5 strategies to help you out in a crazy market. We've got a podcast. We'll have a new episode up tomorrow. We're just starting out the new year. It's season 3. And search for Trade Ideas Podcast in whatever app you listen to podcasts in, and just get ready. You get the new download. We've got a code that's available for discounts this month. It's Winter Studio, all caps. It is case sensitive, so use all caps. Saves 15% off your first month or year of Trade Ideas. Those of you that are on standard can also use this to upgrade to premium and save the same amount. Any questions, email info@trade-ideas.com. You can follow Steve on Twitter @TodayTrader. QuantBot is Jamie Hodges' handle. Trade Ideas Pro is the page on Facebook to follow and get our stuff that you can share. Thanks, everyone. We'll have a recording up later on tonight or tomorrow. Thanks, Jamie and Steve.
All right. See you next time, guys. Thanks.
My pleasure, guys. Bye-bye.
Bye, all.